Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Wednesday, September 2nd, 2009. We start with the Aussie-US dollar pair, which rose in today's trading following a favorable Australian GDP release. The pair, which tested last week's low towards the end of yesterday's global session, rallied 120 pips from that low to trade near 0.8365 by 3 p.m. Eastern. That was a 61.8% retracement of yesterday's slide. Australia's economy expanded 0.6% in the second quarter compared to the first quarter, a figure that surprised forecasts on the upside. Consumer spending was up 0.8%, which added 0.5 percentage points to GDP. The data will increase speculation that the central bank may move to raise rates, which would favor the strength of the Australian dollar. In the US, companies shed more jobs than was expected, though the rate of firings is slowing. Companies laid off 298,000 people in August after cutting payrolls by 360,000 last month. It was the smallest decline, though, since September of 2008. Despite recent indicators that overall economic activity is stabilizing, employment, which usually trails overall economic activity, is likely to decline for at least several more months, albeit at a diminishing rate. A second release from the US showed factory orders climbing 1.3% in July. That was smaller than forecast, and orders excluding transportation fell 0.7%. That signifies weak spending on non-durable goods such as oil and food, as durable goods saw their biggest jump in nearly 2 years. Stocks in the US were mixed, and the euro-dollar pair, following a sharp sell-off yesterday, rose in today's trading. Today's rally paired about 50% of yesterday's down move and kept the pair within its consolidation pattern we have been stuck in since August 20th. The euro-yen, meanwhile, fell in today's trading, pushing the pair to a new 7-week low. Today's decline was not as volatile as yesterday's, but it shows that risk aversion was still the dominant theme in the first half of this week. The pair set its intraday low following the somewhat weak US data. The Greenback gave up its gains from yesterday in the dollar-pound pair, despite the overriding sense of risk aversion. The pound-dollar found support at yesterday's intraday low and rallied about 160 pips. This was a testament more to Greenback weakness than it was to pound strength, and traders may be likely to remain within recent ranges as they await Friday's non-farm payroll report. The dollar-yen pair broke below its support level from earlier in the week, sliding to the 92.15 area. In today's trading, the yen was the major benefactor from safe haven flows, as the Greenback, with its weaker-than-expected private jobs report, was pressured. The recent victory of the opposition Democratic Party of Japan on Sunday also played into this dynamic, as a DPJ official suggested his government would not intervene in currency markets. Tonight, Australia will release data on its services sector and on trade. Overnight, the UK and Eurozone post their services PMIs, while the Eurozone will also reveal its retail sales. Tomorrow morning, the European Central Bank will decide on interest rates, and ECB President Trichet will lay out his assessment and outlook for monetary policy. The US, meanwhile, will post its weekly jobless claims along with its ISM non-manufacturing index. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.